Good afternoon. How's it going, guys?
Good, Ed. How are you doing today, my friend?
Excellent, excellent. I'm doing quite well. How about yourself?
Oh, not too bad. I'm trying to think here. I got a bunch of stuff knocked off at the Fiat jobs, and I was chilling out, having a coffee, chatting with you guys. How was work today for you?
Not bad at all. Not bad. Made some chocolate chip muffins today. That was highlight of my day. Yeah, the usual stuff.
That sounds just like delightfully quaint.
I love not to go on a side tangent, but I love my job. I know it's not in modern culture, it's not the most renowned position to be like just a cook, but it's just such a peace of mind. It's just calming. I can think while I work, and it's fun. I can be creative. It's just a great fit for me. So I definitely don't mind it.
Well,
That's wonderful.
it doesn't feel like work, right? That's
Exactly. Yeah, I go in every day. I'm not like one of those people that's like, oh, I hate it's Monday, or it feels like a chore. I really don't dread going to work, which is all I could ask for.
kind of connecting it back to Bitcoin. It's the number one benefit I think that it gives you. It's the freedom to spend your time. You don't have to worry about making fiat and paying bills because Bitcoin's got your back. You can spend your time doing the things and adding the value you want to add. So that's awesome, man.
Thank you. Yeah, I agree. Hey, Sam. Good afternoon.
Good afternoon. How are you guys?
Doing well.
Doing very well, my friend. How are you today?
Not too bad. This is the one of the days of the year where the whole world stops and listens to the people managing the money, see what they're going to do. So that's always fun.
Isn't it so ridiculous when you just step back for a second and look what's actually going on and how many eyeballs around the world are just focusing on these 12 or one person, essentially?
Yep. If only there's a better way to do it,
If only we had some sort of a solution. Well, Sam, actually, I kind of want to get into talking about your lunch and learn that you had recently while we're letting people kind of file into the room. I know you recently, it seemed like you hosted an event in St. Louis. I was curious, how did it go?
Yeah, I mean, it was the first time Natalie and I did something like that, which was an in-person event. And I think for the first time, it went pretty well. Obviously, we got about a little over 50 people there. And so it was kind of it was a filled room, not a full room, but it was a filled room. And we just talked about Bitcoin. It was more of a Bitcoin 101 breakdown of the problems that it addresses. And then what is Bitcoin? And then there was more of a investment thesis that was given by Matt Dines from Build Asset Management. And then there was after lunch, we did like a self-custody workshop with Michael Jordan from the Bitcoin Way. And so it was a nice little event for somebody new to Bitcoin. And we got a lot of good feedback from it. And, when the price is going sideways and it's not as exciting to get over 50 people in person, I think that was a big win. And so, yeah, we'll probably do that again. And it was exciting. And, I think part of the reason why we did it was it's important to get involved in the local community that you're in. And for both ourselves as well as just to be, present and to share our knowledge with the people actually around us in meat space. And a lot of our industry lives on the internet, which has its pros and cons. And so we wanted to get out into our local community and share our knowledge and teach him about things we're passionate about. And obviously we're both very passionate about Bitcoin. And so we thought it was fun. It was a good event.
Sam, and I don't know if you got a read on the room, but would you say that the most of the people there were already Bitcoiners, or would you say they were no coiners coming to learn about it because they're interested in getting into the space?
I would say probably half and half. There were some people that literally knew nothing. And then there were some people that, knew a lot and they just wanted to be around Bitcoiners, which I'm sure you could understand that too. So it was a good mix. And then in the Q&A session, some people in the audience were chiming in, answering people's question, which was cool. It was very, Socratic kind of vibe at the end there. So it's good stuff.
That's awesome. Was there anything about the event that kind of surprised you or shocked you? I know I did a webinar recently with the guys from Bull Bitcoin, and I had so many questions about securing coins for other people, for kids and grandkids. And I wasn't really expecting that. So I had a few options and things ready to go, but that seemed where at least the room that I was in where the attention was.
Yeah. I mean, I guess it just depends on what, their experience level with Bitcoin. What resonated to people, I think, was some of the problems when you point out like the problem with money, and then you show them the charts of, his historical charts of when we were on the gold standard, or the M2 money supply versus different asset classes. And you talk about Bitcoin as a way to solve that. That's kind of eye opening for somebody who sees it for the first time. And then, yeah, if you kind of fast forward, there was definitely a lot of questions around self custody. And I think that's still daunting to a lot of people. And there's a lot of responsibility that entails. And so there is a lot of questions about that, as well as inheritance, how to secure it, the differences. And then, of course, there's always like the FUD and the risks, kind of like the standard ones that we addressed. But yeah, interesting stuff.
That's awesome. I'm so glad to hear that. Even just quickly on that note too, I'm curious, when it comes to the self-custody side of things, do you have like a favorite go-to or particular wallets that you recommend to people?
Yeah, I'm a big fan of NVK and CoinKite. I just think he built a great product over there. Like, I love the queue that they just made. It was very easy for me to use and just solid product. So I love that one just for a hardware wallet. I like both Casa and Unchained have different trade-offs. They're both great teams that have built solid collaborative custody solutions. Again, I think you should probably research them yourself to understand those trade-offs. But they're both fantastic teams, and I've used them both in the past. So those are like my go-tos. It's Unchained, Casa, and then if I'm doing, you can also set up your own multi-sig if you want. And then I'm using cold cards or some kind of Bitcoin only hardware wallet.
I love the cold card. I really do. And it's funny though, like the things that I'm necessarily looking for aren't necessarily what other people will key into. So the first time I brought home the passport from Foundation Devices, my wife absolutely loved it. And I gotta give props to them just on that design for a different audience and a different kind of customer. She just thought it was a gorgeous product. And of course, I like my little what'd you call it? Almost like BlackBerry lookalike cold card there. So we got a few people filing into the room. And I'd be remiss if we didn't at least touch on the events of today. So, wonderful, Mr. Analyst. We got the 50 basis point cuts. What are you thinking?
I'm thinking that liquidity is about to enter the markets. And I think the Fed is following suit with the other major central banks. I mean, we've already had multiple cuts from the Bank of England, Bank of Canada, ECB. I mean, they're all coming in and they're cutting now. And so you got to ask yourself why. I happen to think that, yeah, you could say that there's a slowdown in economic data. I think the data is completely bunk. So I think it's more about the fiscal situation and the debt. August fiscal deficit recently came in over 90 billion than what was expected. And now over the last 12 months, we've run another $2 trillion fiscal deficit. And the fact of the matter is that the math just doesn't make sense when you hold interest rates at these levels. I believe the interest expense exceeded defense spending for the first time. And so I think that's what this is really about. And so you got these rate cuts. And so I recently, I'm about to release a report that I did with Lynn Alden, where we looked at global liquidity and Bitcoin. And we all know that there's a relationship between Bitcoin and global liquidity, but Lynn and I really dug into the data and tried to quantify that relationship. And it is extremely tight. And compared to other asset classes, it's actually the tightest. And there's kind of like a theory of why that would be. If you think about what drives, say, stocks, there's different confounding factors that drive its valuations. So you think about like earnings, dividends. They're unrelated to liquidity conditions, as well as there's passive inflows from 401ks. So even when liquidity comes out, you can have these 401ks and other retirement accounts actively buying, price insensitive buyers, so to speak. And so they could buffer the valuations of stocks even if liquidity drains out. And then you have gold, but gold has a pretty mixed relationship with liquidity, because gold's kind of viewed more as a safe haven asset still. So when liquidity gets drained out, people still flock to gold, and there's demand for gold because people view it as a safe haven asset. Now, Bitcoin at this stage in its adoption cycle is still broadly considered a risk asset. And then it doesn't have dividends or earnings to kind of add noise to what's driving its valuation. And so, and then there's like Bitcoin scarcity, obviously. It's very inelastic supply and it's very small. And so it's very, very sensitive to changes in global liquidity conditions because of all these factors, and more pure than any other asset. And so when you have an environment where you have central banks starting to cut rates, and you have other factors as well driving liquidity, but that's one of them. Well, that's pretty bullish for Bitcoin when it comes down to it, because really what that's a measure of, and we measure kind of global liquidity by global M2 denominated in dollars. And that's important because basically that's two factors in the liquidity equation, which is the amount of central bank money printing, essentially credit creation happening, as well as, or fiat debasement, I guess you could say. It's one and two are the same. And then,
Yep.
Yeah. And then also dollar strength. So relative dollar strength. And that's important on a global scale because of how much US dollar denominated debt there is out there. So when there's a stronger dollar, it acts as kind of like pulling liquidity out of the system, because more of these emerging markets have to take money and pay off their dollar denominated debt. But when it's a weaker dollar, it's the opposite. So global M2 denominated in US dollars kind of captures both of that. And so Bitcoin is extremely tied to global M2. And if you have a view on global M2, if you're a trader or a hedge fund manager, you know, this data kind of shows that if you want to express that, say, hey, I think global liquidity is going to go up over the next 12 months. Well, you should be using Bitcoin to express that trade because it's the most sensitive out of every single other asset class. And so anyway, long answer, but like when I see the rate cuts, I'm just thinking about liquidity, and it's just one of the factor in this equation, but it's a good thing for Bitcoin when it comes down to it.
Sam,
I agree. Oh, go ahead, Vangel.
No, you first. Go ahead.
Well, I was just going to say, I was curious with your analysis there with Lynn, because I would assume, but I actually haven't verified, because we did see a reduction in global liquidity over the last couple of years with the rate hiking cycle. Is that correct?
It's kind of gone sideways because, you know, just because the U.S. central bank has been raising interest rates, and generally other central banks as well, there has been other ones like China, which have been easing. And so I'd say it's gone like down to sideways. And then, yeah, I mean, like if you're going to go farther back and include like the bear market where everyone, you know, 2022, where everything got totally crushed. Yeah, that's when liquidity really got drained from the system. But over the last, say, like 6 months or so, it's kind of gone sideways. But another piece of the piece was that, you know, Bitcoin moves with global liquidity on 83% of 12-month periods over the last 10 years. So it's not perfect. And over shorter time periods, there are instances where Bitcoin's, let's call it internal market dynamics, override long-term liquidity relationships. So, you know, say if Bitcoin suffers some kind of idiosyncratic event like an exchange hack or something, or there's some kind of major event that really scares Bitcoin holders specifically, like a regulatory development or whatever it is, you know, it could break with that long-term relationship with liquidity. And then it could also be something like when Bitcoin gets over its skis in terms of valuation levels, like the bull market peaks of 2021 or 2017, you know, when Bitcoin's kind of primed for a correction just because of all this like speculative fervor at the top of bull market peaks. Well, that's also times when, you know, the internal market dynamics can override the liquidity trend. And so you got to kind of like combine the two. So just because liquidity goes up, you have to make sure that also the internal markets of Bitcoin are ripe to kind of maintain that relationship, if that makes sense.
No, that does. And it's funny because what I was kind of thinking about this afternoon was kind of looking back on it. And it's interesting that it went sideways. So maybe it wasn't as much of a rough patch as otherwise. But I was thinking about how Bitcoin performed under a rate hiking cycle and then with this kind of flat global liquidity. And it seems like it really came out strong in that sort of framework over the last couple of years.
Yeah, I mean, I think part of it was it's amazing how well it's performed in the last couple, like this year, basically, given that where rates are. But you have to think about, again, kind of these like internal market dynamics of like the opposite way. So like the ETFs getting approved. I mean, that was a major moment in Bitcoin's adoption and in terms of demand from institutions and just accessibility to gain exposure to Bitcoin. That would be, I would say, an idiosyncratic event that wasn't negative. That was like a positive one. So I could see how that would kind of break the long-term liquidity correlation as well, in a good way, right? So
yeah, it's nice to have the bags pumped a little bit every now and then.
Yeah, I mean, but that was, heading into the year. I mean, that was the huge run-up that we saw. I think it's not just the ETFs, but I think it was a major factor. Not only the demand for them, the actual demand from them, but also just the regulatory clarity that it represented and how the bullish sentiment around that was a huge narrative that got picked up. And so that kind of helped drive the price higher in the beginning of the year.
Yeah, that makes sense. So kind of jumping back for a second too, I'm curious on your thoughts. And for the record, I'm in no way an analyst, but I just like to kind of poke around and have fun and look at these things. Of course, I'm only all in on Bitcoin. But I saw that it looked like both gold and KRE, the regional banks ETFs, both kind of popped off with the news of the 50 basis point cut. And I kind of found those almost like contrasting signals in the sense that I could see why regional banks were like, okay, we're going to get a little bit of relief here with the front end of the curve coming back down. But I kind of agreed with what I think you were mentioning earlier, that gold is more of a rush to safety, more of a hedge against kind of chaos. And I'm wondering if that little price action meant anything to you or caught your attention.
Yeah, I don't know if I have. It's tough with these like short-term price movements, but I will say that gold has been performing very well over the last couple of months. And so gold's been kind of sniffing out. I think it's the fiscal situation. That's kind of what I mentioned in the early part of this conversation. It's just the math doesn't really make sense for people. And, you could say that things aren't right with the recessionary indicators and economic data points that are coming in. But really, when you look at the fiscal situation, and there's been so many reports from credible institutions, not just even like Bitcoiners, who have been pounding the table about this for a long time, and gold investors for longer than the Bitcoiners. But like now you have the IMF and you have major officials talking about the unsustainable nature of the fiscal situation, and the conversation and the awareness around the debt and the deficits and the unsustainable nature, it's really become more mainstream. I mean, I'm reading pieces in the Financial Times about it. It's a little bit different than it was 3, 4, or 5 years ago when Bitcoiners were really talking about this in depthly, and gold investors as well. And so I think gold is kind of sniffing that out. And, in terms of the regional bank, I'm not quite sure what that move is today. I don't really focus on like short term. I wouldn't hold the regional bank stocks personally. I think the banking system is, over the long term I'm talking about, but I just think it's prone to more and more concentration. That's kind of what's going to happen. I think they're at a disadvantage to their larger counterparts. And I think that the JP Morgan Chases of the world, the Wells Fargos of the world are just slowly eating up the smaller banks. And I think that'll continue. And so, but, I don't know why it just popped recently. Who knows about these like short-term price movements?
Always can be nothing but just noise too. I just thought it was just caught my attention at least for a second there. Just a reminder to everybody in the audience, it is a Bitcoin Q&A. If you have any questions for ourselves, technicals, we got Sam up here. We can talk about markets. We'd love to have you up and join the discussion. I see Gary joined us here on stage. Gary, did you have any questions or comments, something you want to add to the conversation?
Hey, no, I just jumped in, just listening, driving my daughter home from school. So unless I hear something, I'm just going to be here listening.
Beautiful, awesome. Ed, I've been kind of hogging the mic a bit here. What's on your mind? What questions do you maybe have for Sam?
All good. Yeah. Sam, I'm kind of curious, a little pivot of the topic, but as far as the rate cuts go, do you feel like this was more of a they felt like they had to do it, or do you think this was like a proactive versus reactive? I'm just kind of curious, you having a little more insight to it than I do. What you think about that?
Well, I don't know. There's a saying on Wall Street that's like, when will the Fed cut rates? When it's too late. So I think they're always reactive, typically. And I guess, it's hard for me because I just really don't trust the economic data that they follow. And I don't even know if they, follow the same data internally that they show publicly. It's just, we start to get, it's like the payrolls numbers, right? It's like, oh, it's revised, 800,000 jobs actually weren't created. And then people get focused on the payrolls data again the next week, like it means something. And unfortunately, the quality of the economic data is not just terrible for the payrolls numbers, it goes across the board, because you got to think about the payrolls and how it gets inputted into the other calculations, like GDI, and like it all kind of is connected, and it's in their inputs into the other metrics. And so it's all kind of garbage in, garbage out. There's so much focus on CPI as well. I mean, I don't need to beat that horse. I think people understand that. So
yeah, a room full of Bitcoiners. I think we know that one might be a bit of a lie.
Yeah. So, I just, in terms of the Fed, I think their track record is completely atrocious. So I wouldn't be surprised if they're way too late. I wouldn't, the thing that would be surprised for me is if they were like completely right here. They were like, oh, this is the perfect interest rate for this environment. Like we nailed it. Like that would be
the first time ever they actually got it right.
Yeah, they'd be like, wow, that 50 bips was perfect, guys. We don't need to do anything. Everything's smooth running right now. So yeah, that's kind of how I think about it, I guess.
Yeah, no, that's a fair answer. I was curious because I mean, like I obviously am not as involved in the data as you are, but we all see the debt levels of the US, and that has a pretty big impact on payments for that debt are based off of the interest rates. And I was, thinking along those lines, like maybe, some of this has to do with the debt becoming a little too expensive, and we're running deficits, and just there's no signs in Congress anywhere really across the aisle of wanting to cut spending and like in a significant and meaningful way that would help the debt levels. And I just view that as an issue. So maybe if you have any thoughts on that too, I'd be curious to get into that.
Well, the one thing that they even say is that like how abnormal this is to cut rates when there isn't, when the unemployment rate is still at historic low levels and things aren't that bad. Like there is actually a lot of
highs. Yeah.
Yeah, there's a lot of like green shoots out there, and you can focus on these poor economic data points. But we've already known that it's kind of like a bifurcated economy, where some parts of the economy have really suffered in this higher interest rate environment that are more sensitive, like housing, right? Like small businesses, but parts of the economy are actually doing really well, and there's actually a lot of like reasons to be more bullish. But here we have the Fed, talking about, oh, we actually need a 50 rate cut, basis point rate cut. And, fiscal dominance is a really interesting topic, because if you go back throughout history, like there's situations where fiscal dominance, like the independence of the Fed fluctuates based on, the geopolitical environment or how poor the finance outlook is for the Treasury. And at some point, like World War II is a perfect example where, the Fed at the time was like, oh, no, we can't like do yield curve control. But then at some point, like Big Daddy, the Treasury Department, taps them on their shoulder and goes like, no, we're not asking you to do this. Like your mandates are really cute and all, like the price stability stuff, but this is actually of geopolitical importance that you guys will do yield curve control. And then you see kind of fluctuations throughout history where after World War II and into the 1950s, I think there was some kind of accord or an agreement, I forgot the name of it, where the central bank got more independence back after, the bad times were over. And then it kind of switches back in the 60s during the Vietnam War. And then it kind of flips back where the Fed independence becomes more stronger, the Volcker era, right? But then now we're seeing it kind of change. And it's because of the debt to GDP and all these factors. And so it wouldn't be surprising to me that, at least in part, they'll never say this publicly, but it's about the debt. It's about the fiscal situation. And you're seeing like parts of, signs that central bank independence is being threatened. You saw it as early as like Donald Trump when he was president. He would start to like directly call out Jerome Powell. It was like hilarious. We would call him like bozos and like, you got to cut rates. And he would just, for a sitting president to say that to a central bank Federal Reserve chairman was pretty unprecedented. But now even like in the Biden administration, you see him saying things like, oh, they're going to cut rates, which is like, it doesn't matter if it's red or blue. You're seeing that the elected officials in the Treasury start to opine on monetary policy. And so I think that'll continue if the Fed tries to like not cooperate, which it seems like they are cooperating right now. And I don't know, there's just so much focus over like, hey, it's a 25 bip cut or 50 bip cut. I don't think that matters. I think it's just, I tweeted this, but it's more about the trend, and a cutting cycle has begun. It's a regime change. They're no longer hiking rates. We just went through one of the fastest hiking cycles in history, 11 times in a row. And then now it's like the switch is flipped. And so now we're in a cutting cycle, and we'll see how far they go. But, just to go off one more point, it's, Lynn Alden talks about this too. It's like everyone thought a deep recession was going to happen when they hiked rates as fast as they did, but it never really came to fruition. And it's because so many people locked in fixed rates for 30 years. Like they don't give a shit if the interest rates go up 5% when you got a fixed 30-year mortgage at 2.5%. And you got corporations that have termed out debt to 2030 and 2032 at low interest rates. It's not going to impact them as much. And so her point was like, maybe it's the same way on the other side, where like cutting rates isn't going to be as stimulative as people think. And it's probably going to take like a lot more cuts to actually see meaningful change for households and corporations. And that kind of resonates with me. That kind of makes sense. And so I think you would need a lot bigger cuts to actually see some of this like stimulative economic activity from the cuts, I guess you could say.
Kind of jumping off that too, Sam, for a second. I'm curious your view on, I'm, again, in no way an analyst or professional at this, but looking at it kind of over the last couple of years, it seems to me that the impact of the Fed really is waning in terms of their ability to move markets and to influence markets, and particularly the bond market. It almost feels like they've lost control, and that a lot of it is just kind of talk and hype at this point. We can see the yield curve is grossly inverted still, and they're holding up the front end of the curve. But realistically, it seems like the bond market and the fiscal situation is what's really driving things.
Yeah, I mean, there's another joke, which is like the Fed's best tool is the microphone, right? So they just kind of influence things through their chatter, and hey, we gotta influence markets, and there's like they do their own papers on this stuff. It's like, hey, we gotta, and no, for real though, like how they influence the markets with their narratives and their hitting the microphones, because when debt gets to these levels, this is like the actual definition of fiscal dominance. When the debt gets so large, interest rate policy no longer becomes as effective, because when you raise interest rates to bring down inflation, you end up widening the deficit, and that is inflationary. And so it kind of, it fails to do its job. And so it's like a broken lever. I picture it like a faulty lever, like it's just like kind of hollow when you try to move it up and down. And so that's when that's for me. I think it's more when I look at the Fed, I specifically think about other liquidity programs. Like if they have to come out with new acronyms, I think that's interesting, as well as looking at their balance sheet. I think that is where you're going to see kind of meaningful change. And, you could say that they haven't gone to quantitative easing yet, but they did reduce their quantitative tightening by almost half. And so they've already done that. And so I think where you're going to see kind of more meaningful impact from monetary policy is the Fed's balance sheet and what they do there, rather than interest rate policy, because of this dynamic we're in with the fiscal side of things, with the debt so high. The interest rate, lever is just kind of broken.
Sam, kind of a two-parter here. One, I know it's pure speculation, but where do you see interest rates going by the end of the year? We have, I think, 2 more meetings. I think there's one in November, one in December. And then being at 128 or 130% debt to GDP. Granted, they're calculating GDP off inflation numbers that are probably underreported. I know they mentioned about a 2% GDP growth year over year, but that's assuming their inflation numbers are accurate. So do you see a way out of that 130%? No country's done it yet, but do you see a path for the US being the global reserve currency to get out of that situation that they're in?
Well, Japan hasn't gotten out of it, but they haven't like blown up yet. I guess that's what the Keynesians will say. But everyone's talked about this. There's like 4 different paths, right? You can soft default. You can try to inflate away your debt. You can hard default. You could try to grow your way out of it, right? And you can like restructure your debt too, which is kind of like a form of default as well. So what's the most obvious choice? I mean, they're going to try to debase it, which is what they've been doing. But they could try to grow their way out, right? There could be some kind of productivity miracle. And if I'm an optimist, that happens, it would have to be some kind of revolutionary transformational technology, maybe something in energy. I did write a piece one time talking about how Bitcoin could potentially help move that along as both an energy technology as well as a monetary technology, because I just think one of the biggest problems is the inability to save, and that's really has consequences more broadly with like macroeconomics. If you just think about in a society, if like individuals and corporations can't save, then they don't invest, right? They don't feel comfortable building like long-term projects or investing in long-term big ideas like innovations, because the money itself loses value. And I believe that. And so, maybe Bitcoin is one of these technologies that helps us get out of this debt situation. And that's a kind of another more optimistic view. But yeah, right now, I mean, actually the other way is austerity. Like that's the other way. They can literally stop spending. But obviously that's gone the other way. And now we're running another $2 trillion deficit this year, when for all intents and purposes, like the economy is not that bad and they're still running $2 trillion deficits. So austerity is one other way to get out of it, but that's painful. That takes discipline and politicians thinking long-term. And that's just, I think it's just a fool's errand to expect that from these politicians, because when the money's easy, it's too tempting to try to print. So yeah. So I guess, to answer your question, they're going to try to get out of it through debasement. And then more optimistically is if we have technologies that help us grow our way out of it. And then Bitcoin's this very interesting thing that's never existed in history before, because it's both an energy technology as well as a monetary technology that perhaps could help guide us out of this as our government debases the currency. It's an escape valve.
Sam, I'm wondering if you can maybe just expand on that a little bit. So I've often thought about just the simplistic kind of monetary side of Bitcoin, where that would be just a constraint on spending, and how that could help with the situation kind of moving in the austerity. But I'm curious if you could expand more on the idea of Bitcoin for productivity gains and what you're kind of thinking and seeing there.
Well, the productivity gains, I mean, I just think about saving. Like it's really just about saving. I mean, I wrote this whole piece. I don't know, this was a couple of years ago, but there's this book called The Rise and Fall of American Growth. And it's like a brick, it's like a brick of a book written by this guy from the University of Chicago, whose entire career was looking at GDP growth in America. And I read it, and I was just thinking about Bitcoin. I was thinking about, what are some of the problems of why we're seeing slower growth? What has caused, us to have this growth over the last century or so? And, what I found was that most growth comes from innovation. And a lot of innovation gets funded through investment. And a lot of investment happens because people feel like there's a stability in the money, and they can save, and then they can invest. And so when I broke it down, productivity, really, it's like, hey, workers can become more skilled and educated. That'll increase productivity. When there's more capital to invest, that can improve their efforts, and that could increase productivity, right? And then there can be this like overall increase in productivity when there's an innovative technology. And this could be like anything. Like it could be like the refrigerator, for instance, is an example in this book of how much that increased productivity, because like you can finally, transport, and like the food didn't perish as much. Something as simple as that. Or like the road system, right? That's like an innovative technology at the time that increased productivity like crazy. And so those three things together are how we get productivity improvements. And we've had productivity growth over the years since that famous chart, but it's just been stolen from us via inflation. And so that's why people, like, the compensation hasn't kept up with the productivity growth over the last 30, 40 years. And that's that famous chart you see, like, from What the Fuck Happened in 1971. And that's why people feel like they're on a treadmill, because they're working harder, but their pay is not keeping up. And they're like, well, why is my life getting more expensive? I'm being productive. My economic output per each person is going up, but I'm not getting compensated appropriately. And it's because their wages aren't keeping up with the rate of debasement of the money supply growth. And so how do we fix that? Well, we have a money that we can save in that is resistant to inflation. And that's why Bitcoin, as an innovation in money itself, could be a way for us to kind of basically share in the productivity growth throughout society. And, in a hard money deflationary world, people will save with money rather than with financial assets. And thus Bitcoin, not financial assets, will absorb much of our global productivity returns, since anyone could hold Bitcoin. So it essentially democratizes our civilization's returns. And it's kind of a big idea, but like, when I read that book, it was just like, yeah, I think this could potentially make sense in my head of why this could be a solution. Maybe I'm just like way down the rabbit hole, but I think Bitcoin could be an innovative technology that could help us get there. Yeah.
Yeah, no, I think it's a fantastic idea, because really it just comes back to the ability to just accumulate capital and then reinvest it versus trying to play some sort of financial games or constantly chasing yourself as it's being debased. And it's funny too, because like when talking to people, and it reminded me that in a lot of conversations I have, like even if we were to take the CPI as true, we just say like, okay, that is in fact what the inflation rate is, and this positive number. You're not starting from zero, right? It's like the Jeff Booth thesis is that it should have been declining year over year. So even if it was 2%, who knows what the negative side of that you're already missing out on? It wasn't that productivity was the exact same every year. It's that it's generally increasing and improving. I think that's an absolute wonderful thought. Yeah.
Yeah, no, I mean, Safe Team talks about this too, but like in the gold standard era, I always thought it was really fascinating that some of the most transformational innovations that still impact our daily lives today were created during the gold standard. So like the airplane, the car, AC motor, internal combustion engine, light bulb, you know, these things were all invented under a gold standard. And so to me, it really comes down to having a sound financial foundation in the money itself. And that leads to individuals investing their savings in new ideas and long-term projects that can lead to increased productivity or new inventions that have never been considered before. And today people have stopped making big bets with their savings because the money is broken and they feel to need to invest in passive indexes just to protect their savings. But Bitcoin has the ability to increase the savings rates of households and businesses, which could result in larger investments, which leads to more capital formation and more innovation and higher rate of hopefully sustainable economic growth. And that's the big idea.
Even just jumping off that a bit too. I mean, it's like it's the seen versus the unseen. Like how much in terms of human prosperity and productivity have we completely missed out on from moving to this fiat system, no longer tied to reality? Like what products and innovations were never invented because the environment didn't allow for it?
Yeah, and it's like a counterfactual, but I do wonder that. And then I think about the amount of wealth destruction that occurs when you have this more rapid credit fueled growth that leads to these bubbles and boom bust cycles. They're really harmful because you might grow faster when it's fueled by debt and credit, but when you have these boom bust cycles, a ton of wealth gets destroyed in those bust cycles. I mean, I think an estimated $19 trillion in net worth was destroyed in the global financial crisis, just like evaporated, just poof. And, it seems like these boom bust cycles are getting more frequent as well as larger every single time because of the leverage that's built up in the system as they kick the can down the road. And so you have more wealth destruction. And so that's a problem, right? Because you'd want like more, personally, I would take a lower rate of growth that is more sustainable, that has less of these really destructive bust cycles and instability. And so when I think about innovation, I think about the capital that's destroyed instead of formed, right? That's kind of like investment is like capital formation, where you have the opposite. You have capital destruction with these boom bust cycles.
It's funny too, because one thing I've kind of thought about just jumping off that a bit as well too is the idea that the boom and bust cycles are synchronized across industries just seems completely unnecessary. That it wouldn't necessarily be that way if we weren't all using a corrupt money system. Kind of like let's just say, for example, like these large language models, let's say it's a major disruptor to coding. It's like, okay, well, you might have this big productivity gain and it might kind of shake, application development, but there's no reason that would necessarily have a immediate or direct impact on oil drilling or completely unrelated fields. And so I would think, I kind of would guess that on a Bitcoin standard, even with the boom bust cycles, you wouldn't see it across the economy. There's so many different industries, they wouldn't all necessarily be affected at the same time.
Yeah, 100% agree with that. And also, just kind of not to switch topics a little bit, but we're getting close to the top of the hour. I see that there's a lot of people here that joined recently. If anyone has any Bitcoin related questions for us, whether that be wallets, anything of that nature, or any financial questions for Sam or any of the guests up here, feel free to come up and ask a question. I also see Ben joined. Ben, if you want to come up and say hi, that'd be cool too. And then Nate or Ed, I'll pass it back to you.
So just pivoting then for a second, I know that you've got the news block Substack. I wonder if you could tell us a little bit more about that and maybe things you're working on there, or maybe any other projects, Sam, you're currently thinking about or maybe planning for the future.
Yeah, right now I'm working on the news block. Been doing that for a little while now. It's kind of just a market update every week. giving my thoughts, charts. I think it's actually very valuable. I do it for myself because I'm always following the markets and trying to read a lot of different things. And I think it's useful just to have everything in one spot. And so I actually like curate all the interesting reports and links and articles that I find are the most relevant to Bitcoin, but then just like important for global macro as well. Kind of just put it all in one place and give my narrative around it and try to kind of paint a picture of what's going on, share the most interesting charts, as well as, Natalie reads it. So she's a pro at that. So she reads an audio version of what I write. And so that's been gaining traction. So if that's interesting, it's just like everything you need to know in less than one block. So 10 minutes, short and sweet, all curated right there. Spend a lot of time on that. So that's interesting. You should check that out. And then like I said, I'm working with Lynn Alden on a report right now, and I'm excited to release it in a couple weeks. It's on global liquidity and Bitcoin's correlation to it, as well as using on-chain metrics to try to identify periods where it's likely to break with that correlation. And obviously, Lynn is brilliant. So been working with her on that. So that should be released, I don't know, maybe in a couple of weeks. And so excited to release that and then maybe collaborate with her on some more projects in the future. And then a lot of my focus lately has been on the Bitcoin corporate treasury adoption side of things. I just think that's very fascinating what's going on. And it's something where I think the time is kind of right, given the regulatory environment, as well as some of these other developments where when MicroStrategy did it back in 2020, people really thought like, oh my gosh, it's all going to happen right now. And it turns out it didn't. They were just very, very ahead of the curve. But now we're starting to see some smaller public companies on the margins start to follow suit. They've kind of seen the MicroStrategy playbook and seen the success they've had. There's been some regulatory clarity around the ETFs, better infrastructure, custody solutions, and just more broader institutional acceptance. And then the FASB rule changes, and then also just the macroeconomic environment has helped us, as well as these corporations start to think about the real risk of currency debasement on their treasuries. And so that's something that I've been focused on, getting involved with some other projects, and you might hear a little bit about that in the coming months. But that's kind of where my focus has been.
That's very cool. I'm kind of curious then with your involvement in the corporate side. Are you seeing, I'm curious where the kind of pushback or hesitation is, because it seems like the case study is there and kind of proven, and it's definitely a lot safer of a regulatory environment than it once was. Are people still very hesitant, or is it more just it takes a long time for them to actually get everything in line to make those moves?
It's kind of case dependent. Definitely the latter for some organizations. I mean, larger organizations, there's a lot of moving parts, a lot of convincing, a lot of coordination that has to happen between different parts of a corporation when it comes to tax, legal, auditing, finance, I mean, operations. And then you have to think about IT and like security, and then you have to find like the vendors and partners. I mean, there's a whole thing. And that's kind of what MicroStrategy kind of laid it out, though. So it's a lot easier for people now. But it kind of depends on like the corporate governance and the makeup of the board and all different kind of factors, right? But I think, yes, the case study's there, but it really is like a paradigm shift in thinking for these corporate treasurers. I mean, it's really, there's still reputational risk, for sure. I mean, for somebody to come out and say this, and then if Bitcoin tanked 15% or 20% after they did it, I mean, I think they would be looking for a job. And so not a lot of people want to stick their neck out unless you have like really a lot of buy-in from the leaders of the company. And if you have a really strong, convicted leader, like a Saylor or an Eric Semler or one of these guys who really believe in it and understand the problem, well, it's a lot easier to kind of go through with it. So it kind of I think it just takes time. And I think, this idea that cash is a liability and not an asset anymore. Like that's kind of a big change in thinking. And a lot of these people are still, they don't understand or they don't care that it loses the value, purchasing power. But they will care if, the inflation, which, I guess there's this overarching thesis that the next decade is going to be more structurally inflationary. And if that's the case, and we have inflation and the rate of debasement like steadily higher, well, that compounds. And so they will start thinking about this. It's just a matter of when and how much pain they're going to have to go through before they understand it. So, the smart ones are proactive and will start thinking about these risks and start identifying ways to manage that risk. And then they'll quickly find that because of all these different reasons, Bitcoin's a very attractive way to hedge that risk or protect yourself from that risk as a corporate treasurer because of its unique properties, as well as the fact that it's a commodity and not a security.
Yeah, no, that makes sense. And I imagine there's a lot of kind of like cover your ass mentality out there too, that nobody wants to be, even though there is a first mover, even like the second mover in making those kind of big leaps. I would imagine probably though, if a couple start doing it and maybe doing it publicly, and then especially if we get a little price action in support of that move, that you might see more of a cascade once there's a kind of like a tipping point in terms of corporate treasuries already involved there. So I'll be very interested to see more about that and to see what you're working on in the coming weeks here. Again, we are getting close to the top of the hour. If anybody wants to come up here, ask a question, you got a comment, we'd love to have you before we close down for the day. Sam, I'm wondering if there's anything in the Bitcoin space that has your attention right now. Any projects, equipment, hardware, apps, anything like that you find very interesting, or just kind of has a little bit of focus?
Yeah, one thing that I'm also interested in is Fedi and federations. This whole like eCash movement I find very fascinating. And Obi and the folks over at Fedi just kind of launched this version, and I think they did a great job. And I found it, I kind of set up my own federation, just playing around with it. And it is very interesting in terms of like a scaling solution. And there's different trade-offs, obviously, with anything. It is more centralized and you're trusting, the guardians, but then there's like privacy guarantees, right? And very fast. And, it's basically, there's a lot of different positives as well. And so, I think you're starting to see just crazy amount of adoption on the stablecoin front of like centralized, centrally issued stable coins, US dollar denominated stable coins. And just now you're starting to see US stable coins kind of on Lightning. You're kind of entering this era. And I think there is going to be this like interesting, I don't want to say like, let's say competition between eCash solutions and US dollar denominated stable coins on like second layers in Bitcoin. And so I am interested in like Fedi and federations and different scaling solutions like that. I think it's fascinating. It's very early. There's all these different kind of solutions and tinkering and innovations happening by people much, much, much smarter than I am. But it is something that is on my radar, and I think people should go check it out. I think it's interesting. It's also like not as difficult technically than you'd think.
No, I'll second that. The app is actually really cool to just play around with, and even between like the different mentors and some people that I know, I use the chat function, which I believe is powered by Matrix in the background there too, and it's always really cool to be able to send sats in a chat. So I do really like the user interface and the kind of layout they got there. I'm curious on Fedi there, Sam. Where do you think, or what do you think is going to necessarily drive adoption of that? I'm curious if you have any thoughts on that too. And then also from setting up your own Fediment, how was that process? Was it incredibly cumbersome? Did you find it not too bad? What was that like?
Yeah, I mean, that's kind of, I think that is one of the I guess, bottlenecks of adoption is the perceived notion that setting up a federation is difficult, but it's just as easy as like setting up a node is what I found, because I went in there being like, I don't know if I'm technical enough to like do this. I don't know if I know how to do a federation. And, it was actually really easy. I felt pretty stupid. It's like, okay, anybody could do this. Like, it'd be really, really easy. And then it just comes down to like basic key management to make sure you don't mess it up. Right. There's some responsibility to being a guardian of a federation, being in control of like the mint process. And so, I think it's just new. I think in terms of like driving adoption, I think some services, I know, like we've even talked about this, like federations, like white glove service, just to help people kind of get on board. That could be helpful, similar to how certain services were built around multi-sig to help people get on board. And then, I think the incentives though are what actually drives the adoption, because like I said, the privacy guarantees of eCash and federations is super attractive. And then the usability and the scalability of the transactions and those are all like really attractive features that I think more and more people will want to be a part of. And then also the power of community. I think if there is like a network effect and you have a lot of these federations grow in size and activity, eventually there's a lot of like transactional activity happening in them. There is like network effects, right? Where like if your friends are using this thing, then yeah, that could be a driver of adoption as well. This like community oriented model encourages adoption, as people are more likely to participate in the systems governed by individuals they trust, which kind of increases the overall security and the confidence of the federation itself. And that's kind of like the overarching thesis of like what Obi has talked about, is like, there are trade-offs here. There's no doubt about it. I mean, it's not going to be as decentralized as Bitcoin, but that's not the point. It's more centralized, but then there's privacy guarantees and usability, and you can kind of trust people in your communities that you can even set up like one with your family, right? You can have like without your extended family, you could have a federation, and then obviously like I would trust like, well, maybe I'm trying to think of what like uncle would be like actually my uncle probably could do this. Like it is really easy. So, and honestly, so like, I could have like an uncle be a guardian, brother, I'd trust them more than a lot of other things. Right. So like there's some like security guarantees as well. And yeah, so anyway, I think those are like the incentives that drive the adoption. Maybe there'll be services built up around it that help people along the way, help get it set up. And, I'm definitely thinking through potential products like that as well. Like, again, it's so early in Fedi and federations and Fedimint. And it's just cool to kind of be on that frontier, kind of at like the cutting edge and seeing what's being built and what will be built.
No, I often think about it even too from like the adversarial standpoint, like looking back on the trucker protests in Canada and trying to think like it seems like we have so many more tools for privacy and for moving value around, like how would, or if something even like Fedi would come into play in that situation as a way to get funds to where they're needed when the banking system is kind of being cracked down upon. We are coming to the top of the hour, so I will. I do want to just kind of end with one quick Hail Mary question, and then I'll pass everything back over to Ed. I'm curious if you have any outlandish market predictions or something interesting to share, and if not, maybe because we touched on it briefly, we know that most of the data is garbage. I was wondering if there's anything besides the bright orange light that you'd recommend people kind of just watch.
Like watch like a metric or an asset or something like that?
Yeah. I'm curious for you, if there's anything like a metric or any sort of assets that you pay attention to, maybe that you think have a little bit of signal despite Bitcoin. Not including Bitcoin.
Got it. Well, I've kind of like talked about global M2 a lot. So I do think that's a good metric to keep an eye on. it's just even like there's so many investors post GFC who have said similar things where it's like, we live in this liquidity driven market now because the central banks have completely wrecked everything, and they've distorted financial markets so much that stock valuations are no longer driven by fundamentals. It's really just there's one game in town, right? And it's the central bank and the government. And so like you have to just keep an eye on liquidity conditions. And it's just the name of the game in terms of just like generally getting the right trend. And that's like the biggest part of any kind of investing or trading, which I'm not a trader, but if I was, then I would be looking at liquidity conditions pretty tightly. And so that includes like things like the dollar and global M2 and seeing how it all kind of lines up. And so I guess that's the metric I would look at. And then in terms of Bitcoin, we talk about MVRV has historically been a really good on-chain indicator, which you always got to be careful with on-chain metrics. There's a lot of assumptions with them, but that one's actually pretty good. It kind of makes sense to me because you just have like the market value of all the Bitcoin. So it's just the market cap basically. And then the realized value, which you could just think of as like the price, the average price that all the coins last moved on chain. So think of it as just like the cost basis of all the Bitcoin. And so one thing you could think about is when there's a big gap in the MVRV ratio, when the market value gets way ahead of the realized value, you could think of that as like a ton of people are sitting on unrealized profits. And that happens during bull market peaks in like 2017, 2020, or 2021. You see this like huge gap between the market value and the realized value. And typically what you see then is older holders start to take profit and sell to the newcomers coming in at the market tops. And that's literally what makes market tops, right? You get all these newcomers coming in speculating. They don't know what the hell they're holding. And these guys are just feeding them their coins right at the tippy top. And then, so typically when you see MVRV get to kind of extended levels, and, that kind of has been a reliable indicator for timing bottoms and tops, but the data set's very small. There's only 3 data points basically there, but it's hit each time where if MVRV came above 7, that usually marked a period of, let's say, like speculative access. And and so anyway, that's another metric that I like keep an eye on. But I always take a very, I never focus on one metric. I never look at one thing. I always just try to like keep an eye on a lot of different things at the same time and just kind of like paint a picture. And then my strategy is very simple. It's just stack sats and chill and be humble. It's treated me well for the last 8 years now. And I mean, it's very simple. It's not that easy. But that's why you just got to understand what you own to kind of hold through the volatility. And, you kind of benefit. That's the one thing I'll just say. I mean, I've hit this home so many times. It's just like, I've did all the number crunching and research. It's just like, you can't be on the sideline when Bitcoin spikes up. I mean, you will vastly underperform if you try to time things and you miss those days where Bitcoin spikes up 7%, 8%, 10%. And that's how it behaves. It's the reason why holding feels hard is because it literally trades sideways or down majority of the time. And then it kind of spikes up these like elevator up moments. So stock market, you go stairs up, elevator down. Bitcoin's kind of like stairs gradually down, elevator up. And so you don't want to like miss those days, because if you miss them and you're on the sideline trying to time a trade or something like that, like you'll miss it. And then that compounds over time to the point where you could be so bullish on Bitcoin and you miss like 10 of those days and somehow you're actually down on your money when you could have just been sitting in it the whole time. And so just know that when you're trading a very volatile asset, you are you're up against a lot. You're up against the algos, you're up against people with a ton of resources, and you're also up against the volatility of Bitcoin. And so good luck to you if you can be successful. But I think the right strategy for majority of people is just to invest. So, right, just stack and hold. That's not financial advice. That's just life advice.
Yes. I absolutely love that. It's like after years and years of research, the answer was just buy Bitcoin and wait.
Yeah. I mean, more or less. Well, and then awesome. you check your thesis, like, are they going to keep debasing the currency? Yes. So
yes, the greatest
if that ever changed, then maybe I'd reconsider. But unfortunately for the world, seems to be going the other way. Should probably hold on to the scarcest asset in the world.
100%.
Yeah. Well, thank you so much, Sam. Really appreciate the conversation. I think there was a lot of valuable information that you shared in here, and I could have listened to it for much longer, but to be respectful of your time, I do want to wrap it up now. And is there anywhere that people can go to learn more about what you do? Obviously, if you haven't heard of Sam, you're not following him yet, give him a follow. And I highly recommend just listening to some of the other interviews he's done, because he offers a lot of great information on those as well. But if there's any special website or something that you want to share with people.
Yeah, I mean, you could give us a follow at thenewsblock.substack.com. Again, that's something that I write every week. Natalie voices it. I think it's a great little publication for quick and dirty what's going on, good charts, good curated links, reports, all right there in one spot. So newsblock.substack.com. Check me out at Twitter. Obviously, we're on Twitter Spaces right now, so you can just give me a follow. And then keep an eye out for the report, the liquidity report I mentioned with Lynn. I think that's going to be interesting for some people. And so excited to release that.
Awesome. Well, thank you so much. And for everyone listening, like I said, give them a follow. And if you want to keep updated on the spaces, give us a follow that are up here speaking. We work with Bitcoin Mentor, and we can help you guys with self-custody, running a node, anything Bitcoin related that you need help with. And you can find us at bitcoinmentor.io. Email us or book a free one-on-one session and get to know how we can help you in your personal situation. But on that note, we do the space every Monday, Wednesday, and Friday, and we will be back here on Friday. So at 3 p.m. Eastern, just so you guys know. Same time every week.
Sweet. Thanks, guys. Thanks for having me.
Yeah, thanks a lot for coming. Really appreciate it. Yeah. Take care, guys.
Yep. Thank you so much for coming by, Sam.
Thanks, guys.
Of course.
Take care, everyone.
Take care, everyone. Bye.